Looking at this one, I think it would be pretty safe to say we're in rejection territory. This level in here definitely jumps out at me, but the margin's quite wide for an intraday trade. If we go down to the 15-minute time frame, it's quite... Good afternoon, ladies and gentlemen, and welcome to this afternoon's Non-Farm Payroll live trading event. Hope you're doing well out there. Looking forward to what we expect to be maybe an action-packed session this afternoon. I certainly hope it is. Been waiting for these NFP numbers for a while. So as we usually do, ladies and gents, we're going to break down the data in real time. Look at the consensus, look at the previous figures, look at the expected forecasted figures, explain what may happen as a result on either side of the market, and then the good stuff, we're going to look for some trading opportunities. Anyhow, hope you are all doing well at the moment. It's incredibly cold here in England right now. We had a bunch of snow in London yesterday, which was pretty neat actually. It then soon turned to incredibly dangerous driving conditions in slushy and horrible and grey and wet. But today we've been blessed with a nice sunny clear day. And things are looking ever so good for our natural gas position as well. For those of you who have been on that trade from our market report some weeks ago now, it's doing incredibly well. We're currently trading up near the all-time high of the trade itself. We've been doing very, very well indeed. On NG, currently locked in at a 1 to 15.3, I think it is at the moment, which is, it's just been superb. And we are looking at continuing this one on, so that's great to see. But I'm not really going to be here to talk about any of our ongoing stuff today. It's more about, obviously, that non-farm payroll and what we can be expecting from that this afternoon. So good afternoon to you, Cora Tim. Good to see you. We got Davison in the house. Good to see you, buddy. Good afternoon. Hello there, Ryan as well. We got Jack, of course, as well. Good to see you, mate. And good afternoon to everybody out there on YouTube as well, who will be no doubtly seeing this. So I hope you guys are doing well out there as well, enjoying yourselves, getting ready for this afternoon's non-farm action. So let's get into the data then. What are we looking at today? So the previous figure, first of all, was 22K. The consensus is a 50K number, and the forecast is a 50K number as well. Obviously, we are looking at not just the non-farm payrolls, but the unemployment rate as well. And the unemployment rate is looking at 4.3%, as same as the previous figure. So we're looking at pretty much stability there. Look, in all fairness, guys, the forecast of 50K over a 22K previous figure is not going to shape market sentiment at all. It's going to be pretty quiet. It's going to be pretty stable. Possibly a bit of a non-impact event, frankly. But if we get above, let's say, 120K, even though that's a relatively small number, that is going to be really over and above what we have been expecting, as well as the rest of the financial markets and all of the economists around the world, etc. So you are going to see a very big shift in commercial interest from shorts to longs in the United States dollar, and you will probably see quite the volatility strike in our US indices as a result of that as well. Now, I can't see how this is possibly going to happen, but if we actually miss the previous figure, right? So we've got a 22K previous figure. If we get anything below 22K, I really do believe it will be catastrophic for most of the trading assets. So below 22K for the US dollar will absolutely sink it. The DXY currently trading at 100.312. Interestingly enough, right up at the nib there, of our structural point. If we go for the nice big breakout, if today's the day, then the DXY will ultimately be breaking free of this very long-term range that we've been in now, and possibly heading up to the next point of call, which will be at 101.7 up at the highs there. And this would also signal the end of this trend that we've been in for quite some time now. I mean, DXY has been trading lower since January of this year. We've spent the majority of the year quite bearish. So right at the end of the year, you know, the last couple of months at least, we've spent, well, more than that, to be honest. I mean, the last 4 or 5 months, actually, we've been down here sort of in the trenches, if you like, and getting ready for that next leg. We've been trying to determine whether it's going to be the bearish breakout down below the lows. We did think that this time around at 17th September, or if it's going to be the big breakout above and we're going to start seeing some fresh bullish price action coming into play. Now, for me, I'm not bullish the DXY ultimately until this level in here is busted. Okay, so this is the big one for me. Call it a liquidity block if you like. We get above there, then we really are at that kind of cycle at the bend at the end of the trend is going to be, you know, that signal point to us that, okay, market's going to go long, and we're going to see a continuation of some bullish price action for a while now. But today really does hold the keys to that. I mean, if we get a huge miss in the numbers, I expect the DXY by the end of the day to be trading back down towards, I would say, 99.64, possibly even lower. If it's a beat on the consensus at 50k, then we could be looking at the first time where we've seen the DXY trading above the Friday 1st of August high, which was at 100.26. We could be looking at maybe coming up to a high at the top of liquidity point, maybe 100.686, which then means that next week and into the rest of the year, we're going to be trading in very much bullish territory. So it really is there's quite a lot riding on it. I wouldn't say this one in particular, looking at the consensus versus the prior figure, etc., is, you know, I don't think there's going to be too much shocking information that's released to us. But if there is a lot riding on it. Now, the unemployment rate completely stable as well. We do actually have existing home sales out later on this afternoon, and that's looking pretty stable as well. So not really looking at too much there in terms of market impact. If we look at the where is it? ADP. Anyway, what's the day today? 20th, isn't it? Average hourly earnings. Thank you. That's what I was looking for. Right. So looking at average hourly earnings, this is the month over month and annual data as well. We have pretty much stability across the board. So average hourly earnings monthly data is looking at a 0.2% decline. A 0.1%, 0.1% decline. And the average hourly earnings annual data is looking exactly the same. So stable at 3.7%. This would ultimately show the Fed that there's sort of, I would say there's probably pretty much reason for the Fed to continue dropping rates at 0.25% intervals. I think if there's going to be a big miss in the average hourly earnings numbers, then it could promote a freeze on current interest levels. If we're looking at the non-farm payroll in particular, in terms of the interest rate decision, the next one, December's, of course, then looking at a big beat in the numbers, 120 to 150k, probably going to be quite supportive of a 0.25% cut in the December meet. If it's a big miss, maybe let's say sub 30k, maybe the same as last time, around 20 to 25 or below, that's gonna show us the opposite. So we do want to be thinking about those interest rates as well. Now, you don't need to worry about the science. Ultimately, I will guide you through the science as much as I can of what the expectation is going to be from the Fed. But the markets will be watching it, and they will be watching it to build into their models for the December rate cut as well, to see if it's going to promote further rate cut or if there's going to be a rate freeze at that level until Q1 2026, which is scarily close now. Good afternoon to you, Ali, as well. I see we've got a few more people dropping into the room there. Good afternoon to you, everyone. I hope you're all doing well. So Yeah, that's where we basically are then with the data today. So we've got about 18, 19 minutes to go before the event takes place itself. So what we're going to do is dig into some FX metal opportunities and then polish off with our US indices and see where we go from there. Just a bit of housekeeping, by the way, for those of you who were in the oil short from this week's market report. Disaster. We got that absolutely amazing sell-off, came right the way down to the lows at 62.98, was thinking it was going to be done before the end of the day, and it was at that point at 1:30 yesterday when we were looking at this price, and it's just reversed from there, and now we're trading up at 64.13. So it's a bit frustrating at this stage. I can't see UK Brent selling off, that much before the weekend, so we may end up having to actually remove that trade from our portfolios before the weekend, but don't worry, I will send out a reminder about that one tomorrow. Right, let's get going then. So first of all, we're going to look at the USD Yen and the USD CAD. So USD Yen, let's go grab some context on the daily time frame here. Really nice big breakout this week, guys. We actually broke structure at around 155.12. We're currently printing a high 157.61 up against the peak point here. It's not the absolute peak, but it's pretty much there. So that's kind of peak there, isn't it? And then we've got this sort of secondary ceiling, which is about here, which is where the market's just coming into now. Make no mistake, there is going to be a lot of resistance for price action between 157.75 and the high at 159.0 whatever it is, 060 or whatever. So looking at this one, I think it would be pretty safe to say we're in rejection territory. This level in here definitely jumps out at me, but the margin's quite wide for an intraday trade. If we go down to the 15-minute time frame, it's quite a big jump. But I don't think if we get the right NFP reaction, we could certainly. I'm thinking possible structural break of this level in here, and we could possibly look at the pending target about there. We don't need to take it all the way back down to 156.93, do we? We just need to be in and out of the market as quickly as possible. Now we could look at the entry target and, of course, the stop loss being a nice little margin behind the top there. I mean, that's, if we lock in a 1 to 3.85, you're definitely going to be walking away, slippage or not, you're definitely going to be walking away with a 1 to 2.5, minusing a 1 to 3.85, due to the slippage rates and stuff that you guys will be experiencing if you do decide to participate in the live environment today. So we're definitely going to be walking away with something pretty good on that one. So I quite like the USD Yen short. Moving up into the USD CAD, see if there's a long. The USD Yen didn't have any long availability, so be good to try and get some longs. So we have that area in there. Peak point. This is the beginning of the major inflection point on the UC. And then we have this really nice area in here where it comes up to retest. So that's in there, which is going to be a right pain in the ass because it's directly above price action, but not so much that it doesn't have a bit of a margin of move before we get there. And as soon as we break that one, we are going to be running straight head first into a whole array of further liquidity points. So frankly, we're not really going to be running a path of these resistance until we break the high of 141, which is really frustrating. It means we can't really trade the USD CAD long successfully with today's anticipated data. It just doesn't look good enough. It doesn't support it. The short, I mean, at this stage, the USD CAD doesn't look very good for a short either. Frankly, it doesn't look very good whatsoever, this USD CAD right now, actually, from where it's trading. If we went up to the daily time frame, things might look a little bit better, a little bit more consolidated. So, of course, we've got daily high, and we have the daily point of structure, which is about there. So then that becomes your trading margin, which is not bad at all. But the 15-minute time frame looks incredibly different. Yeah, very much so. Go back down to the 15. Yeah, it's not too bad. That's not too bad. But the problem is, I mean, what are the chances we're going to see that in and out today? I mean, it's slim at best, isn't it? we get some whacking numbers from our NFP, then possibly. But yeah, it doesn't look very good so far. I think this would have to be a trade that we took based on NFP data, but that we probably ended up closing out tomorrow. That would be the way this went. So let's put a trade in there anyway. Let's set up a trade regardless of that, because it is a nice trading margin. We can look at a 1 to 2.9 on that one. Really nice little return there on the investment side. So that's good. We also have, now that we've gone up to the daily time frame and looked at our market in a consolidated form, we can also see that we've got a pretty decent margin for a short down there as well, which is quite nice. And this does make a really nice no man's land on top of that. So we could look at the short down to there with our stop loss, a nice margin above there. That's a 1 to 3.4. So really, really solid, well-rounded trade as well. Not too bad on that front. Let me just download these so I can fire them out to you so you have them to hand as well. Okay, great. Right, next up, we're going to take a view on the Euro USD. Euro USD at this time, not too bad. Again, looks a little bit more short than long. We've got the major inflection point down there at around 114.80. We've got an immediate floor for the structural breakout about there. Let me just go back in time. Yeah, that's not bad. We do have a TRF situated just below that, but it is NFP, so I'm going to assume that the market will be able to just bust straight through there. I'm wondering if the margins are there to clear that out of the way first. Maybe save us from getting trapped. Yeah, I think so, actually. That doesn't look too bad, does it? Yeah, no, that's absolutely fine. So we're going to play it safe with the euro dollar. Break of structure is going to be much lower. Entry, target, and our stop loss for a 1 to 3 there as well, or 1 to 2.95 specifically. Not looking too bad at all. On the long side, got to study the previous price action and gives you all the clues you need. It's a very, very choppy chart though. Most of them are at the moment, team. It's been a very choppy period for our markets recently, hasn't it? You know, it's been a real struggle these past couple, well, more than a couple of weeks now, to be honest. If we had a trading opportunity above there, we're still running the risk of this most recent high. It does give it a nice no man's land to move and flex and breathe. But that's problematic. It's problematic because it is also that area there, which was the sum result of this retest and this continuation. That right there, very important level. Nice block that was formed in there as well. What to do? I mean, if we wait for the break of structure of that point, you're not going to be running much of a less margin than the one down at the lows, are you? So say, for example, it breaks out long. We're going to have to be on fire with this one. I mean, this is a 1 to 2.24. But the market then has a very large area to move. So we're not going to be trapped, hopefully, in an ideal world. I wouldn't believe we will be sort of trapped in the shorts or the longs at this stage. Nice margin of breathe in there, you know, move around without us potentially getting wicked in for the long or the short. So I quite like that. It's going to have to do for us today. It's the best of what the Euro USD has to offer based on the anticipated data as well. So that's that one. So Euro USD, USD Yen, and of course our USD CAD. We can have a quick look at cable. I don't really want to have too much more exposure in the FX space in particular. So we've got the high up there. We've got, yeah, that low. That's about all of the trading margin we've really got to work with. possibly considering putting some alarms on this one, not having any trading opportunities in it per se. Yeah. I think we're going to have to take cable under advisory at the moment, not really place any trading opportunities in it directly, but we can come back whenever the market breaks one of these levels. We'll get pinged and then we can go and revisit it, see if there's anything available for us. Right, let's move on then. Let's have a look at what's going on in gold at this stage. Gold's had a terrible week this week. It's not done anything. As soon as we got to the end of the Friday weekend close, that was about there. We opened up. It's not done anything since then. We did have this little rally. Thought it was going to go up and away from there. We decided not to take this. Or I didn't take it anyway. And we did get some really nice breaker structure access points to it. I just didn't take it. We possibly would have been stopped out had you taken one of these trades. Maybe not that one, but definitely this one. But it's just not there, is it? It's just not been moving. I think it's probably got all of its... I think most of gold eyes at the moment are going to be waiting on this afternoon's NFP. That's really what we're looking at here. The market's holding their breath for the NFP this afternoon. I'm not really sure what to say about it at the moment. I'm really not. I mean, obviously it looks like it wants to go long. It's got a bullish path of least resistance. High of the move is 41.30 at this stage. It's too close to have a solid trading margin from where we're trading right now. Do we think gold is going to rally up to 41.71 as a result of today's data? I really don't think so. So what do we do with it? I always like to try and have some gold exposure if possible, but I'm just not seeing it. I'm just not seeing it at the moment. What about silver? We took a loss on silver this week. We took a long on this breakout here. Survived for a while, but then came and took us out on this move down here at around 4.30 yesterday. I mean, there's certainly room for a silver short down at that previous low in there. This will be a nice in and out trade if we can manage to capture this one. So looking at the short margin between those lows and the floor, not bad. Looks a hell of a lot better than gold, to be honest. Let's guess the NFP number and make a giveaway of eating hat by Max. I don't know about that. I'm not in the hat eating mood today, mate. Yeah, that's not bad. That's not bad. Again, though, I don't think I like it long. Let me start firing some things out. Davison, NCD USD short. Yeah, we'll check that one out, buddy. No problem. Let me just link you guys the book so far. I might have included a natural gas trade in there. Ignore that, obviously. I think I can delete that. Yeah, there you go. Right, so looking at gold longs, what are we going to do about this, team? What are we going to do about this? We got 5 minutes to go. I still need to punch the numbers in the broker. I really don't know what to do about this. Horrible pattern at the moment. That's the trading margin. I suppose I don't want to be justifying trade ideas. Certainly not. It's very dangerous trading psychology. But I mean, that's not bad, is it? You know, we've got this little downward wave here. We've started forming higher lows, higher highs, change in direction of the channel. We got the break of structure. We're getting the retest of it right now. It's got a good solid trading margin, I suppose, up to 41.32. But where do you take the trade? Is it this level in here? Is that the break of structure for it? From yesterday? Or is it actually even further up than that? Is it this one? If it's that one, you guys have got the space of a single 15-minute candlestick to get in and out of the gold market. Spreads are going to be increased. You're going to be affected by slippage. I would be surprised if you made it out there with a 1-to-1. I would say probably a 0.8. 0.7, 0.8 trade. And that's, you know, if you have that knowledge and you trade with it anyway, I just don't think that's very smart, personally. I wouldn't get out of bed for that on a regular. So I think I'm probably going to have to give gold a miss today, guys. I really do. We're going to have to be good with the silver short and be happy with that. If the market wants to go long, then we'll revisit things. But at this stage, yeah, I'm not liking it. So I'm going to give it a miss. Right, we need to get on with our US indices as well. We've got 4 minutes to go, maybe not even that, like 3 minutes. So first of all, US 30 Dow Jones. We've got the floor in there, high here, major inflection high. Lots of commercial selling interest takes place. We've got the double bottom down here as well at the moment. It's not making any progress to the upside, but it's a big point of liquidity in there for sure. We've also got the floor down here. We're not going to be looking for the greedy stuff. Not right down at the bottom there, but this area in here, the intricate level. So let's pull that across. We've now got a solid trading margin. So now we're going to be looking at a potential short in there, targeting the floor down at 46.051. Stop loss nicely tucked in behind that margin for a 1 to 3.6. You're probably going to net a 1 to 3, maybe a 1 to 2.8. So that's not bad at all, that one. If you want to go long, let's just check out the other indices at the moment. I think NAS 100's probably got the long because we got the high, we've got the ceiling, you've got a TRF, which is situated right at the 50% point. I don't think that's going to do anything at all if the market wants to break out long today. So we're going to go long the NAS 100. Again, we're going to tuck in right behind the little breaker structure point there for 1 to 2.74. So that's pretty decent as well. And then we've got the S&P. Short availability doesn't work in the S&P, but the long on here does as well. We've got those two. We've got the ceiling. We don't really have anything else to worry about. It's a pretty clear margin. So that's not looking too bad at all there as well for a 1 to 2.81. Okay, team, it's time. So, time to punch some numbers and get ready. 0.25% risk at maximum. 0.2 is the recommended risk per trade on NFP days, okay? But if you are, for whatever reason, not going to listen to me, 0.25 is the absolute maximum. But remember, you historically, these times, volatile markets, especially with what's been going on recently, it's not wise. We've got less than 60 seconds. I'm going to do some wild things this afternoon because I'm not going to be able to get all these numbers in. Hands of lightning. 46.051.29. That's done. Stop lossless for some of them. Do as I say though, not as I do. Right, we've got 10 seconds to go, team. 139, 944, 157, 189. Right, 1 second to go. Boom, that's that one. Okay, it's got to be. Let's check this out. Right, let's go check it out. Let's see what the score is. Whoops. Okay, what are we looking at this afternoon then? We've got, wow, a 119K actual number. So that's a huge beat on the forecast. Wow, big number from the NFP here, guys. And we've got a 4.4% unemployment rate and up 0.1% on that side of things. Let's check out the average earnings data. This is looking pretty good for some of our trades here, guys. Average hourly earnings, 0.2%, down from 0.3%. Oh, no, sorry, actually. Wow, man, that's savage. 0.4% was the previous figure on the average hourly earnings. So that's 0.2. That's a 0.2% reduction. We've got a 0.1% increase on the annual, so a bit of a flip-flop in the data there. This could cancel each other out, to be honest. It's quite stark difference in the numbers of average hourly earnings. The unemployment rate, of course, is up 0.1%, and the non-farm payroll is at 119K, which is a really big beat on the 50K forecast. Really big. But, of course, yeah, big move in the euro dollar. I could take a market order on that one. I didn't actually manage to get that in, though, that pending, unfortunately. Yeah, we'll revisit that Euro USD because I didn't have the time. I couldn't get it in. So obviously that's scrubbed. NAS 100's just ticked in, says the S&P. Yeah, that could have been so good. It's still running at the moment. Yeah, but I'm not sure. I'm not entirely sure about that USD yen, guys. If we didn't just punch a hole through the target profit, I'm not entirely sure about that one at this moment in time. USD CAD, still thinking about things. Not really much of a move out of that one, surprisingly. What about gold? Yeah, I'm glad I did not trade gold. That was the right move to make. Definitely the right move to make. It's basically unaffected entirely. How's our silver doing? Yeah, complete non-impact on that one. Let's check out Davison's NZD USD. See how that's doing. It's got a pretty big bar, comparatively speaking, at least. We have... Well, actually, it was already considering that one in the past, wasn't it? Let's check out the daily, get some daily context. So we're bouncing back from liquidity again. This could be construed, I suppose, a bit of a retest, but I don't think it's great. I don't think it's absolutely great because, I mean, frankly, we haven't had too much of a breakout on this one in the first place. But it's certainly got some work to do to get through this level because there's a lot of lows in the market there. So it's going to have to work hard to push through there. There'll be a lot of commercial shorts in the market up around this area. So if it wants to go long, like I say, it's got some work to do. Yeah, that's collapsing already from that point in time anyway. Let's have a look back at the USD yen. Yeah, not looking good at all. USD CAD. Ultimately looking pretty non-impact eventy, I suppose. Great use of the English language there by myself. Euro USD's collapsed as well. That's going to be a loss. Yeah, these are all pretty much non-impact event moves, to be honest. We've had these little instantaneous bars, but no follow-through whatsoever. And I can only assume that the reason being, even though we had a good number on the NFP, we've had the other data that it's really strucken it out. So yes, we had a good NFP number, but it wasn't good enough to overrule the 0.1% increase in unemployment and the big decline in average hourly earnings, guys. I mean, that's a big drop in average hourly earnings. A 0.1% deviation on the annual data is not really anything to worry about. Yeah, we had one positive and we got two negatives. So it's all just cancelling each other out at the moment, unfortunately. Gold short. No, not for me, bud. No, not for me. Not at all. We've got a massive floor of liquidity directly below us. Market's been trading within this one for a while now. So I wouldn't be looking at gold shorts until we break out at least 4K. It's where selling interest starts to really get exciting. Around there. For the time being, I am long and only long, but that's in bias only. I wouldn't be looking long otherwise. You know, I'm not looking to put any real money on the line for this at this stage. It just doesn't make sense. I mean, this could be anything. You look at this candlestick, this could be anything at all. It doesn't even look like an NFP move. It doesn't look like any news has hit the market at all at this time. So we don't want to force trades. We don't want to force trades. And I'll tell you what, after going through 6, 7, 8 NFPs and, you know, getting 2, which were real nice movers and getting some really decent liquidity and some real decent trading volume, that's a lot of NFPs that have done nothing. And it's very easy to want to get some trades in for the sake of it, but it's, yeah, you got to play it safe. You definitely have to play it safe around times like this. That's going to be a 0.2% in the bin. So with the S&P at this stage, I imagine. Don't really foresee any reason for that one to continue rallying at this point in time. US 30 Dow Jones is actually holding its gains up there on its 15-minute candlestick, interestingly enough. Obviously, the only one that we decided not to put in long. Let's go back down to the bottom of the list again. Still holding on. Still holding on. USD CAD. That's actually forming a pretty interesting bar now. Yeah, pretty decent move, but I am really not liking our trade idea now. Yeah, I'm not entirely sure. What are we thinking? I mean, that's a... I still like it. I mean, don't get me wrong. I still like the trade idea, but I'm wondering if it's the right thing to do now. Let's have a look at the DXY. Yeah, see, we've pulled away from that high again, haven't we? Currently printing 100.1. What's cable up to? So cable cleared the margin between the two. The problem is, with a lot of these moves, I mean, that is the move. Right there, in the sense that over the course of the next 30 minutes to maybe 1 hour, we're going to be taking our foot off the gas. Trading volume is going to be diminished. The market's going to have digested the data. I mean, we're already at 20 to 2 in the afternoon, which means we've got about another 5 minutes left of the initial excitement from the news, and then it turns into snail's fest. So let's go back down to the USD CAD. No. USD Yen. No. Holding on by the skin of their teeth. Let me check my account. Yeah, not looking great. Not looking too healthy. Right, that can be gone anyway. That's done. So that's over. Starting to catch a tiny, tiny little bit of a bid in here at the moment. Right, well, look, that is what it is. Let's think about the let's think about the Fed. Let's think about the Fed. I can get back to my DXY. So, in terms of the Fed and what they're going to be looking at, and definitely average hourly earnings is going to be coming into the equation, okay, without a shadow of a doubt. And the average hourly earnings at a 0.2% reduction is going to be concerning for the Fed. Now, they don't really hold the monthly data in too high a regard, but that's a pretty steep decline. Now, in terms of the annual at a 0.1% increase, that's negligible. It's kind of within the standard deviation, either for or against the original number. So 3.7, you could have got 3.6 or a 3.8. Either of those numbers is not really going to cause the markets to shift sentiment too greatly. The 119k figure for the NFP, though, that's a hell of a lot of jobs more added than the previous one, which is going to create a relatively hawkish Fed view on employment. Now, we do need to see, obviously, the next batch of employment numbers as well. Remember that we're a little bit late down the line now, of course. So we're still looking at the previous month's data, even though it feels like we're ahead of time. It's just because of the government shutdown. So we still need the next round of data. But if that data is bullish as well, then that could seriously shape up the Fed's decision on the next rate cut to bring down those interest rates by another 0.25%, which in turn, of course, will remove some pressure from the DXY. We also have the CPI up and coming as well, which is going to be thrown into the equation. I think US CPI, when is that? I did see it. It's called PPI. That's on the 25th. I don't have it yet. All right, let's check out the rest of these. Yeah, they're just literally flirting with stop losses at the moment. S&P 500 is doing okay, but it's break even. When I say it's doing okay, I mean it's break even and not near a stop loss. USD Yen's not in. USD CAD's not in. Sorry, USD Yen is in, but not doing anything. USD CAD is currently flirting with stop. Well, it's not triggered, but flirting with entry, let's say. So not a great deal. Not a great deal. We've had these sort of big instantaneous. Well, I say big, not exactly big, are they? So we've had. This is the initial volatility strike candle. This is where really, if you're a professional, this is where you should start considering trading. And we've had three little bars, and then it's just ranged predominantly thereafter. We look at the S&P on a 1 minute time frame. You can see it again here as well. So we trigger the trade, and then bang, it's just grinding. So we're really not seeing any kind of trading volume from this NFP this afternoon, unfortunately. But that is the way it goes, team. That is the way it goes. We're used to this. We should all be used to this by now. Unfortunately, I mean, the 119k, that figure, it would have been a big event today had it not been for the anticlimax of the average hourly earnings. You know, one has cancelled out the other one. That's the problem. If we did have the 119k and bullish average hourly earnings data at the same time, I'm telling you, that would have been big. But it's not the case today. So that's pretty much it. That's pretty much it. I don't have anything more to add, and I don't want to waste time for the sake of it, trying to make things up to talk about and stuff, because it's counterproductive. So let's have a think about this afternoon's US Open. Of course, we are purely trading on European liquidity at the moment. We still need to get the Americans on board and get them excited about the data or not. Based on where these numbers are trading at the moment and the lack of a move from this afternoon's non-farm, I would expect there's probably the opportunity to see a continuation. Not necessarily in counter trend. I would actually believe that there's probably the chance to see a potential continuation away from here. So, look, at the moment, I mean, the US 30 Dow Jones is where it's at. We've got the potential for a slightly continued long. But we've already got positions in the NAS 100 at the moment, which looks so damn close to going to stop loss. I mean, this is literally like hair's breadth away from the stop loss. But I would still be considering a long in the NAS 100 this afternoon. The S&P is heading down to stop loss currently. We have the potential for a short in the NAS 100 back to the previous lows, and that's about there. So what we could look at is a break of structure trade below. Where would the break of structure be? Possibly around here, for example, to take a day trade between 25.054 and the floor at 24.965. That would be nice risk reward. You know, little stop loss tucked in around 25.085. That's going to be nice. That's going to be a solid return on that one. So you could look at that one for the potential short. The S&P. I'm not really interested in S&P short at this stage, frankly. So yeah, that's that. The short on the US 30 Dow Jones could potentially work. If you wait for the break of structure underneath there, you could actually take the short between this point and that point there. So, you know, that's a 1 to 3 right there for a potential short with a really nice BOS. So you could look at something like that as well this afternoon. Not bad. Not bad. Natural gas has taken a bit of a shunt from the NFP data by the looks of things. It's down 1.47%. Don't forget as well, of course, you have the commodity open in the US, which took place about 15 minutes ago. So this is a bit of breakout volatility coming in as well for our commodity traders out there in the United States. That one currently trading at 434, but honestly, guys, there's not much to consider at this moment in time. We're trading purely weather cycles and the production for production utilities and NG. So long as those two continue to work hand in hand with each other, we should still be good. And I mean, look at the size of that thing now, you know. It's not done too badly. And that's about it. I think that's about it, team. So I'm going to wrap things up there. If there's no questions, nothing else anybody wants to ask or find out about, no problem at all from this end, of course. It is what it is. We'll see how we get on over the course of this afternoon's US Open. Maybe there'll be some more opportunities. Of course, we do still have the NAS 100 and the S&P 500 running. The S&P is actually making some progress into its target at the moment. The NAS 100 is currently at break even, but we could look at the continuation this afternoon. It could be two nice trade ideas. One's a 2.74, and the other one's a 1 to 2.81. So not bad, and let's see how we go. If the market's dipped down, then we've got trade ideas on the other side of the market as well. So let's just take it from there and see how we get on. All right. Right, guys, I'm going to wrap things up there then. Thank you so much for joining me this afternoon. I do apologize on behalf of our non-farm payroll data and that it yet again wasn't really the kind of big impact event that we all hope it's going to be. But nevertheless, I hope you took something away from today. I hope there's something in there that you possibly didn't think about before, something that you picked up on that you could have, you can use down the line. And yeah, wishing you all an absolutely fantastic rest of the week. If I don't speak to you again, or if you're out there on YouTube watching, then please have a wonderful weekend. I look forward to catching up with you guys as well in the following weeks as we get closer to Christmas. And I'll catch you then. So take care, guys. Trade safe, and I'll see you later. Bye-bye.